Good morning, everybody. I have a special guest with us, Bob Ma. Thanks for being with us this morning. Really appreciate it. Looking forward to this topic. Maybe I'll let you give an intro to yourself to everybody.
Yeah, thank you so much, Nick. And thanks, Casey, as well, for having me on today. It's definitely great to be here. As a quick intro, I'm a principal at Wind Ventures. We're a San Francisco-based venture capital firm, which invests primarily at the Series A to C stages. Our investment focus areas are across three themes: energy, commerce, and mobility. And currently, our lead our firm's investments in commerce, fintech, and AI. And then within AI, I led our firm's investment last year into Field AI, which is one of the leading general purpose robotics foundational model developers. Related to physical AI, we're also very interested in the autonomous vehicle space. My work in physical AI is what got me interested in the CMOS image sensor space because I wanted to understand what are the foundational components that really enable physical AI, both from the software side, but certainly from the hardware side. So I published a thesis recently on this topic in the AI journal, which is a framework I'll talk about a bit later today. So that's my quick intro. It's just some quick customary disclosures for me. My discussion today is for informational purposes only. It's not investment advice. These are my personal views only, and I may hold investments in the companies that are mentioned or discussed today. And so with that, I'll hand it back to Nick.
Thanks, Bob. And we appreciate having you on, especially regarding your work in physical AI. I think this is a really good topic, not just because it's a company that we have neglected to cover up until this point at Chipstock Investor, but because it is an important topic and one that everybody's really interested in right now. When do we start seeing applications for all this work that's happening in the data centers, all the AI inference that's being talked about? Okay, that's great, but when does AI actually start entering the real world, the physical world? So this is some highlights of what we're going to talk about today. We're going to come back to this slide in a moment. But Bob, let's start with a slide that you put together for your article that you wrote for the AI Journal, talking about Sony Semiconductor. We'll talk about Sony more extensively here, but this is interesting because when we're talking about CMOS image sensors and AI applications, we have to start with where this all came from in the first place. So what are we looking at here in this slide that you put together?
This is a slide that looks at the historical trend between Sony Semiconductor segment. So Sony is a conglomerate with a couple of business lines, but image sensors is one of their main ones. And if you trace it back 20 years, and especially looking at when they actually landed the biggest customer today, which is Apple, and every single Apple camera today on your iPhone uses a Sony CMOS image sensor. And so I thought it was really interesting to see how this kind of grew over time. You can see the green line here is the measure of the total megapixels on the top of the line iPhone. And the blue bars is the revenue for Sony Semiconductors. And their main product line is CMOS image sensors. And you see a very close correlation of the two. That's one of the things that got me interested. There's a very close correlation between camera technology in general with the CMOS sensor industry. And then one quick kind of framework that I think about with this, how Jensen says compute equals revenue. I think in this space, cameras equals revenue. Cameras, whether it's quantity or also quality, equals revenue for this industry. So it's a very close proxy.
Absolutely. And in typical semiconductor fashion, you actually see the number of megapixels increase at a faster rate than the revenue. So that's fantastic. That's what enables Sony to be able to charge progressively more money, and why Apple is willing to pay progressively more money is because of that really incredible exponential growth of the megapixel count in these. And maybe we should talk about the technology before we talk about Sony specifically. There is some older image sensor technology that we're not going to talk about today called CCD, charge coupled device image sensors. Actually developed at Bell Labs back in the 1960s, but it was actually NASA that developed the CMOS image sensor in the 1990s. And to make that designation here up front, Bob, this is going to be important when you talk about physical AI later on. CMOS, or complementary metal oxide semiconductor, that's the industry manufacturing standard for semiconductors. It's what makes CMOS image sensors very cheap, very affordable, and provides that scalability of performance at an exponential pace. So basically, you have a lens on top that helps focus the light through a color filter. And on the left, we have an image of what those color filters look like from Ansys, now part of Synopsys. This is actually the technology behind our displays. But instead of the different pixels lighting up to create a color display for us to look at, it's actually the opposite. Those pixels help form eventually the ones and zeros. The light gets converted into ones and zeros by the transistors underneath the lens and the color filter. Also, there's some DRAM memory there to help with the image processing. So it's the opposite. It's taking what the camera is looking at, what the device is looking at, converting it into ones and zeros for the device to be able to work with. And where Sony really has excelled at this, as you mentioned, Bob, this is basically all they do. They do image sensors, and that's helped them gain and maintain market share leadership. We'll talk about some of those competitors here in a moment, but ultimately what this looks like on the top right and on the bottom, all the different CMOS image sensor form factors, they package this up into a device that includes a lens and a camera on the back of here, an iPhone. This is what we have come to know as just smartphone cameras, but underneath the surface, what you're actually talking about here is CMOS image sensors. And built a little mini supply chain here as well for everybody to take a look at. So Toppan, another company in Japan, you may know them from our conversations about photomask development for lithography equipment. Toppan is one of those companies, but they also provide the color filters. Applied Materials and Tokyo Electron make a lot of LED and OLED equipment, manufacturing equipment. So they're involved as a supplier for Sony. And then their two top customers, Apple, Fujifilm is another one for their cameras. Ansys and Synopsys, of course, already saw them on the previous slide for EDA software, design software. Bob, before we talk about the competitive landscape for Sony, I thought I would just call out Umbrella here, a company that we've discussed in the past that does image and video processing semiconductors. That's all they do. So if you're a company buying these CMOS image sensors, if you used a company like Umbrella, you're basically using two chips from two different suppliers. You still have to buy the CMOS image sensor, but then you also have to buy the image or video AI processor from Umbrella. It creates complexity if you're a company developing this stuff versus a company like Sony, or if you're also buying these image sensors from Samsung or OmniVision, Onsemi, Canon as well, who makes the CMOS image sensors only for themselves. It's all on the same chip, both the sensor and the AI processing. And Sony in particular excels at this. So that's what makes them the market leader.
Companies like Sony, they're doing more and more of the logic processing directly on their chips. So it's kind of an interesting competitive dynamic between someone like Sony and Umbrella. So it's quite interesting.
Yeah, I know you're going to talk about this more extensively at the end because that is highly relevant when you're talking about making the jump from a smartphone camera to a physical AI device. Smartphone cameras, to their credit, the latest and greatest iPhone. I'm a Pixel phone user myself. There's some amazing stuff that happens once the image or the video is taken within the software and within the circuitry on the phone to increase the quality of the image and the video and do fun things with filters and whatnot. But talking about physical AI, the stakes are much higher than just taking a picture or a video with your phone. So this is a place where Sony really excels. So Sony's the market share leader. That's who we primarily want to talk about today. But who are these other players and where do they fit into the overall market dynamic?
I would say the big four, if you will, would be Sony, OmniVision, Samsung, Onsemi, and especially the areas that we're most interested in is the smartphone, CIS, CMOS image sensor, and also the automotive or physical AI ones. And what we're seeing is Sony is the largest market share at about 50% of the overall CIS market, and primarily because they're the dominant player in the smartphone market. They're essentially right now the exclusive supplier for iPhone CIS, which is a huge market. But Samsung is definitely there. They do a lot of good work as well with their CIS for their own phones in particular. But now I think we'll talk about later what they're doing potentially with Apple. Onsemi is the leader in the kind of automotive grade in terms of pure volume of CIS for automotive. But again, I'll talk about later. There's a difference between the different tiers of automotive CIS. And then OmniVision, I think they do a lot of work in China, the company that's based in China. So they're supplying a lot of the companies there. And then Canon, obviously very good camera maker as well. But I would say the big four, Sony, Samsung, Onsemi, and OmniVision.
Yeah, I had to throw Canon in there because I was thinking about it overnight again. I thought, where does Canon actually get their CMOS image sensors for their cameras? And it seems that they design their own and use their own chips. This seems to be a bit of a mystery who actually manufactures those for Canon. I don't think they manufacture the whole chip in-house, but regardless of who manufactures it for them, it's for their own internal use. So as you said, the big four, the companies that design the CMOS, the CIS, and sell them to external customers would be Sony, OmniVision, Samsung, Onsemi. Maybe if I could just make a connection for everybody here, because Onsemi we have talked about extensively. And last year we talked about some acquisitions Onsemi made in infrared sensors. So it's kind of a different type of sensor that we're talking about today. A CMOS image sensor would just look at the world essentially the way we see it with the human eye, versus an infrared camera would only detect primarily that portion of the electromagnetic spectrum that falls on the infrared. So it's more like industrial or medical imaging, aerospace and defense. That's a more recent focus for Onsemi as they've tried to differentiate their product. They're not trying to compete necessarily with Sony in this market. It's a different type of image sensor versus the ones that Sony is working on now for physical AI. So Bob, in preparing this, you had a lot of insight on what's happening with Sony right now. Here's a look at their revenue segments. Break this down for us, because this kind of goes back to 2019 when Dan Loeb basically proposed Sony do some things with their business model that 5 years later is now starting to happen.
Yeah, for sure. Sony historically has been a large conglomerate with a wide variety of businesses. We're all familiar with the Sony TVs, et cetera, from decades ago. They were initially a consumer electronics company, but starting about maybe 15 years ago, they've really made a concerted pivot into more of the entertainment and content businesses. So here is a kind of an outline of all their main business lines. The blue is the games and network services. That's basically video games and PlayStation. Music, they're one of the top 3 music labels in the world. And then pictures, they're one of the biggest Hollywood studios, top 4. The green bar is the consumer electronics hardware business, and red is the image sensors business at Semiconductors. And so basically what happened in 2019 was that they're putting out Thesis, which you can actually still find online, saying that for Sony to unlock shareholder value, they should actually try to reduce the conglomerate structure of the company. And in particular, what they advocated for is spinning off a couple of these non-content, entertainment content segments, including Semiconductors, which is actually their main argument. But they also argue for doing something with financial services, as well as more of the consumer hardware electronics business. And so last year, Sony actually did proceed and complete a spinoff of the financial services business. So this is like life insurance, primarily just in Japan, basically. Actually, they announced signing this sale of the majority stake, 51% of their consumer TV business to TCL, which is one of the main manufacturers in China. So we see them kind of really adopt this more of a shareholder-friendly approach in terms of reducing the conglomerate discount and making it more of a play right now, more investment with the entertainment assets as well as the semiconductors. So it's a more simplified company.
That was interesting. Essentially, at this point, the only thing they haven't done to complete all the main points from third point back in 2019 is spin off Sony Semiconductor, the image sensor business. That's the last thing they haven't done. Yeah. And it remains to be seen if they will actually do that or not, or if they're going to keep it together.
Yeah, exactly. That's really interesting. I'll be paying close attention to see what they do with that.
Let's jump to the EBIT margin, because I think this helps explain why third point wanted this change in the first place. So here's the EBIT, earnings before interest and tax profit margins for Sony's different revenue segments on the previous slide, excluding financial services. I forgot to mention we excluded that on the last slide because it's now a separate company and there's actually publicly traded stock on the Tokyo Stock Exchange for that. But look at the EBIT margin of the red bar there at the bottom, the imaging and sensing. This would be a pretty good sized and healthy profitability-wise leading imaging and sensing company in the semiconductor market if it were spun off from the rest of the Sony entertainment empire. Just looking at this over the last reported 12 months, in 2025, Sony Semiconductor EBIT was at about 18%. So pretty decent here, but I think the third point was trying to make was that's actually quite a bit higher than the rest of the Sony entertainment business overall by a fairly decent margin, with the exception being Sony Music. That's at about a 20% EBIT margin, but everything else is low teens or single digit EBIT margin. So there's the rationale for spinning that off, and we'll have to see what they decide to do with the semiconductor business. I'm going to pause here for just a moment, Bob. This is OmniVision. I updated this as well because they also just reported their earnings yesterday. This is actually not in yuan, it converted to US dollars. I think it just helps with the overall picture of growth for the CMOS image sensor market right now, because even the distant second place company behind Sony Semiconductor is still growing at a pretty decent pace, mid-teens, at some points almost 20% year over year revenue growth for this OmniVision. So the first most important question for you, Bob, is why CMOS image sensors now? What's the case for owning Sony, and specifically Sony Semiconductor, kind of buried within the pretty decent entertainment business, doing pretty well? You could have made the case we should own Sony Entertainment because the new Spider-Man movie is coming out later this year, but why CMOS image sensors specifically right now?
Thanks. Maybe I'll just give some background information about my thesis that I outlined here when it comes to CMOS image sensor, CIS, and physical AI. The argument that I make is the catalyst for this space. This chart here is outlining a framework that I outlined in my article at AI Journal, which is kind of trying to match different foundational chips for different legs of the AI journey and identifying what is that for physical AI. For the training stage, we're all very familiar with GPUs, kickstarted everything. And then we're now squarely in the inference stage, and ASICs and memory have really come to the forefront. If you ask the industry leaders in AI, Jensen Huang, Elon, et cetera, even Wall Street analysts, the converging agreement is that physical AI is the next big leg of AI. And what is physical AI? Physical AI is just the connection between the physical world and the AI software. So the foundational chip that enables that perception is the CMOS image sensor. And if we look at this perception layer, vision isn't the only perception. We also have sense of touch, sense of sound. But CMOS image sensor is the most interesting because if you look at physical AI across any embodiment, the core sensor that connects the physical world to the AI is vision. A very simple way to look at this is you can absolutely program a autonomous vehicle to drive through a busy city street with just cameras, vision alone. You cannot do that with just microphones and a touch sensor because the amount of information conveyed in vision and sight is exponentially higher than what you get from all these other senses. So that's why vision is the key kind of perception layer for physical AI. And within physical AI, while CMOS image sensor is, as Nick started talking about, it's where the rubber meets the road. It's that specific chip that converts the photons in light to electric signals that are then processed. And so it's really the foundational. Without this connection, there's no perception for physical AI. And the evidence here is that across every single physical AI embodiment today, whether it's robotics, autonomous vehicles, or a new category that I'm quite interested in is AI wearables, like the AI glasses. Across every single embodiment, there's always vision as the primary perception layer. And what's interesting also is that we're talking about Sony, which is the market leader, the number one player in CIS right now. What we're seeing in the market in CIS is that it's very much a premium tier versus a standard tier. And Sony is really in that premium tier. If you don't mind, I'll give you a couple of quick examples to illustrate this. In the robotics space, one of the first mass production humanoids is going to be the Tesla Optimus. It has this camera sensor suite of 8 cameras. And they've basically taken the camera suite from the full self-driving to the humanoids. That's actually based on a Sony CIS technology. Or if you look at another very popular autonomous robotic form factor, which is the quadrupeds or the 4-legged robotic dogs, such as by Boston Dynamics, for their most advanced sets, they have up to 15 cameras on that little robotic dog. And on their most advanced camera sensor suite attachment, they're actually openly marketing, they're using Sony CIS. So that's robotics. And autonomous vehicles, this is a very here and now thing. If you have Waymo in your city, you know what I'm talking about, or Tesla robotaxis. Here, we're also seeing the top tier players. So Waymo, for instance, just came out with a 6th gen vehicle this year. They've actually been able to reduce number of cameras on the Waymo from 29 cameras down to 13 cameras, which is in itself kind of telling because the current most popular Waymo is basically covered from head to toe with cameras. But with the new 6th gen Waymo, they've been able to reduce the cameras because they've actually upgraded the CIS chip that's used in the Waymo. And while Waymo doesn't disclose the supplier, what they have disclosed is that it's a 17 megapixel imager. There's a good chance that they're using Sony as well. And we've talked about Tesla, they're currently using Sony CIS. So across robotics and autonomous vehicles, we're seeing the entire kind of autonomy being enabled by multiple cameras, specifically a suite of sensors. And then also third category I'll quickly mention is the AI wearables. So these are AI smart glasses. Meta Ray-Ban sold 7 million units last year, which is I think 3x more than what they sold in the previous 2 years combined. This is a very popular new category. Apple's getting it on it. Samsung is joining that as well as OpenAI. They're all reportedly building AI glasses. And here is more of an adaptation of the smartphone CIS. If you look at teardown the Meta AI glasses, they're using a Sony smartphone sensor CIS in their device. So all of those taken together, what we're seeing is every single AI embodiment has, in many cases, multiple cameras requiring multiple automotive or physical AI grade CIS sensors. And then even with the AI wearables, they're basically adapting the smartphone CIS sensors to enable the sense of sight. And there's just one final point about physical AI. The technical requirements for physical AI CIS is distinctly different from that for the smartphone CIS for a couple of key requirements. So one is you need basically instantaneous processing, near zero latency, because when you're driving an autonomous car, you can't have any sort of latency with visual sense, processing. And so essentially, they're going to have to adopt the stacked architecture with the logic chip underneath this CIS to do instantaneous processing. And secondly, you can't have any sort of motion blur for obvious reasons. And in this case, what the physical AI sensors are doing is they're adopting global shutters architecture instead of rolling shutters, which are the technology found on smartphones. And that avoids any sort of motion blur. Third is that you need very fast real-time dynamic range so that when you're exiting a dark tunnel into bright daylight, the CIS isn't blinded for like 2 seconds. And then finally, CIS sensors generally are more rugged. They operate under greater thermal ranges and they last longer, essentially, than smartphone ones. So basically, we're seeing two types of markets. One type of CIS for smartphones, one for CIS for automotive grade, physical AI grade, which typically costs quite a bit more per unit than the smartphone ones. And so if we believe that physical AI is the next leg of AI, this will be a very widely adopted technology. Morgan Stanley has come out and said that they expect 1 billion humanoid robots by 2050. So if you believe in that vision of the world, then the CIS industry is going to be very interesting to follow in the coming years because it's going to be a direct beneficiary of that.
Yeah, absolutely. I think the other big thing too, CIS, CMOS image sensors, they're pretty affordable. So to bring it full circle back to the iPhone, all the work that Apple did in pushing Sony and Sony pushing the development of these things and increasing adoption of them in the smartphone industry has got us to this point where if you need a very affordable and multiple affordable image sensors for your physical AI application, we have it thanks to the mobile industry, the smartphone industry, and Apple and Sony because of this. So interesting to see this take shape. Typical just semiconductor fashion, exponential increase of the performance of the chip and of the devices themselves helps with the proliferation of use cases and proliferation of the chips themselves over time, and it decreases the cost. Good stuff here. Developments in robotics, teaching the robots about the deterministic laws of the physical world, Newton's laws, rather than relying solely on learning from online videos or maybe even artificially generated data. What kind of developments do you see happening right now in training these robots on actual real world data?
Yeah, so it's a very timely question. Nvidia just launched their Newton 1.0 physics engine at this year's GTC. I think they announced it last year, but now it's actually rolled out. Basically, it's part of their Omniverse ASIC simulation system. This is basically translating those real world physics laws into very realistic simulation and basically helps Nvidia build a better kind of framework and foundation models for robotics. What's interesting here is that even though this is a very good physics simulation model, at the end of the day, you still need real world data to build a robust autonomous vehicle or AI robotic solution, because in the real world, there are just an endless amount of edge cases, things that are unexpected. A ball rolls on the road before your car. You can't simulate all of those. So at the end of the day, you still need a tremendous amount of visual, in particular, visual data to train a very robust model.
Yeah, and these chips, I would add, are going to help with that. The more that are out there in the world collecting imaging and video data, that's certainly going to help. Before we move on to the next question for you, how do you feel about the Lidar versus camera debate in physical AI applications?
Very interesting question. I mean, this is the Waymo versus Tesla debate. Tesla has gone with a full camera setup. Waymo, they use cameras, LiDARs, et cetera, the more sensors. I think having redundancy is important for safety reasons. You could have redundancy in terms of cameras, in terms of edge processors. You can have maybe more than one chips that are processing the data. But I think redundancy in general is just important. And I guess we'll have to see. It's kind of up in the air. I saw some data that came out, I think maybe a month or 2 months ago, about the accident rates of Tesla. Maybe it's a little bit higher than what they were thinking, what they're hoping for. But again, I think it's maybe a little bit too early to tell. I think Waymo, most of us would agree today in terms of mass deployment, they're far ahead of Tesla. But then again, Tesla has the benefit of having so many more vehicles on the streets. So we'll have to see. But one thing I would point out is that even with LiDAR technology, with the most recent types of LiDAR, the SPAD LiDARs, they're also actually manufactured using the CIS technology. So a lot of companies like Sony are actually also making advanced LiDARs for autonomous driving applications. So it's almost like two sides of the same coin with LiDAR and CIS.
Yeah, absolutely. That's kind of like Onsemi, some of their new image sensors focus on the infrared portion of the spectrum. It's all CMOS image sensors. It just depends on what the application ultimately is going to be. The company can customize their product, their device for whatever the customer needs.
Yeah, just quickly on the infrared sensors from some of the research that I did, I think that in the future could have automotive applications as well. And what's interesting is currently those are actually quite expensive, in the 5,000 to an above range. Maybe that's because they're just not as massively produced. But shortwave infrared sensors is potentially could eventually make the jump from industrial to automotive use cases.
Yeah, per usual, this stuff is just expensive when it starts out. It's just prohibitively expensive. Here's another good question that was pre-submitted for you, Bob. The time for CMOS sensors, why is the time now? Talked about that, but is there a technological breakthrough causing this to happen right now? Or is it elevated interest just in robotics in general that's causing some conversation around CMOS image sensors?
Yes, definitely. There are technological breakthroughs that's making this trend here now opportunity. So the first type of technological breakthrough is the software. It's the AI side. We're at a point where we have many good companies, well-funded companies, as well as large technology companies coming out with very robust foundational models for robotics. And as I mentioned earlier, we're investors in a startup called Field AI. They're one of the leaders developing general purpose robotics foundational models, where the idea is that you build one AI brain that you can then apply across various different types of robots, be it humanoids, quadrupeds, drones, etc. And there are other companies that are doing similar things, like Skilled AI is another well-funded startup doing this approach. But we also have big technology companies such as, I think, Google is coming out with some sort of Gemini robotics foundational model. We know Nvidia Group is one of the open source models as well. And so we're seeing a couple of very well-funded, very sophisticated companies around the world developing foundational models for AI. And we're just at that point where this type of technology started to roll out. The interesting thing with general purpose robotics foundational models is it really drives down the cost of the software and the cost of robotics adoption generally, because you no longer have to train each type of robot, which takes time and it's expensive. But now you can only do one model that can be applied across different form factors. You really drive down the cost of the robot. And that has the effect of making hardware a commodity. And if you look at some of the Chinese manufacturers, Unitree, for instance, they focus primarily on the hardware development for different robotic form factors. And currently, from what I see, they're actually pricing their humanoid hardware starting at about $5,000, which is much cheaper than, first the new cars. The cost of robotics is coming down hardware-wise. Software, we're at an inflection point. And so I think that's going to drive the adoption. We're at the point where we're about to see an increase in the adoption of robotics. And then secondly, I'll point out is just on the manufacturing side, this is also becoming more mature. With Tesla, currently they're in the process of converting all of their Model S and Model X production into Optimus production. They're expecting, I think, be able to produce 1 million units of the Optimus by the end of this year. So this is something that Tesla's doing right now. And I believe if you want a Model S and Model X, you have to order like right now, because that's going to be robots by the end of this year. Tesla's making a huge bet on this. I think they're also building a big factory in Texas that's going to produce up to 10 million units per year in the future. So I think that's a concrete example of adoption. And then finally, it's just the AI wearables, which I mentioned earlier with the Meta AI glasses really starting to take off. Silicon Valley has tried over the years various AR, VR, metaverse solutions. None of those have really taken off, but this AI wearables glasses form factor seems like it's actually taking off. So that's also another evidence that the sort of physical AI is here today, this year.
Yeah, we might just be at the leading edge of this finally breaking out of the data center and being a real world thing. One last pre-submitted question from me. I wanted to talk about the risks for investing in Sony. How is the company positioned to deal with those risks? One risk, I think it's a little too easy. It's a lob, really, is Samsung might become a second supplier for Apple, perhaps later this year or in 2027. That aside, though, what other risks are there to investing in Sony right now, especially because you have to buy the whole thing, the whole package. You can't have just Sony Semiconductor at this point. So what do you think about that?
Yeah, like you said, it's not a pure play semiconductors. Semi, I think in the company's current forecast, 23% of operating income, 70% is the entertainment businesses, games, music, and movies. So besides that structural risk, if you're looking for a semi play, there are also a couple of other risks. So number one, and it's the most tangible risk, is the AI memory shortage. As you know, Sony's biggest business today is video games. So the PlayStation platform, which requires memory, requires storage. Sony and the entire gaming hardware industry has been hit pretty hard by the AI memory shortage. So for instance, if you look at Sony and Nintendo, I think both of their stocks hit basically one of the all-time highs just recently, it's late November. And when the AI memory shortage kicked in, both Sony and Nintendo stocks are down about 30%, maybe even a little bit more for Nintendo. So in terms of how they're addressing this, what the company has said that they've secured enough memory through the end of 2026. So if the AI memory shortage is resolved by early 2027, we could see this cloud be lifted. We'll see. That's one risk that's here now. Some other risks for investing is that a couple of their businesses are very cyclical. So for instance, the video games business that they're in, it's both hardware and software, but for the hardware side, it comes in 7 or 8 year console cycles. And over the last decade or 12, 13 years, this cyclicality has been reduced a little bit as games distribution has shifted to primarily a digital distribution model. So basically, gamers are locked into specific ecosystems, so they have a digital library. And more recently, over the last 2 years, their biggest competitor, Microsoft, has made a big strategic pivot. And after they made this acquisition of Activision Blizzard, they've now transitioned to becoming a third-party publisher. And now they're actually the biggest third-party supplier of content to the PlayStation platform, of which Sony takes 30% of every game that's sold on the PlayStation. And so that's another reason why the cyclicality issue is affecting Sony's gaming division a bit less. The other division very cyclical is pictures. I mean, a strong year when you have something like Spider-Man coming out this summer is going to be a strong year for this division. But in years where they don't have a blockbuster, the year's probably not going to be as strong. And then finally, third area of risk, it would be geopolitical. Sony is a Japanese company, so they are subject to tariffs, which is 15%. And also geopolitically, I think you have to consider the East Asia tensions between China and Taiwan. Japan's new prime minister made some comments about getting involved with defending Taiwan potentially. So that kind of caused a lot of tensions as well. So that's also a real geopolitical risk that you have to consider.
Yeah, especially a lot of these markets in East Asia. This is an issue for Taiwan. A lot of these countries are net importers of energy. Higher energy prices hit if you're a manufacturer in Japan, and just in general, it's going to hit perhaps the Japanese market overall. And then also just the fluctuations in the yen, especially if you're an investor based in the US, something to be aware of as well. Ultimately, though, I mean, I think we're probably of the same opinion on this, Bob. If Sony, the business, executes well, currency fluctuations kind of just come out in the wash at the end. But just another thing to be aware of, because it most definitely does cause stock price volatility if your currency, your investments are denominated in a different currency than the investment itself.